Stock market sold off today, but then rebounded midday. And we'll watch the stock market. So I am not a financial advisor. I'm not responsible for your losses, only your profits.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenchio.
Hey, it's KP coming to you live from Corona, California. It is 8:50 on the West Coast, a tremendous amount to talk about as we end the quarter. 3 months are over, and Eid Mubarak for those that celebrate. Islam is one of the largest religions in the world, and I know the celebration, Ramadan, is over. So I saw some great posts about that. Okay, it's jobs week. We have JOLTS report coming out in the morning, the job opening and labor turnover. Labor is the main focus of the Fed currently to make sure that the economy isn't really cracking. There's nothing more deflationary than when your income goes to zero. So I believe 140,000 non-farm payrolls expected on Friday for the month of March, which, as we know, is the second half of February and then the first half of March, just because collecting data is always a challenge. But then we'll see the revisions, if any, to prior months. Will there be downward revisions? If labor is softening, that's usually what we would see. The unemployment rate is expected to go up to 4.2%. So Mondays are always long here at the office. I was just at the inaugural Customer Advisory Board for Zactus, our credit provider. Pretty awesome event. Sasha Stair, Jennifer Hamby, they put on a great event. Obviously, they had some great leadership there. Greg Holmes, their Chief Revenue Officer. Shelly Crockett, whole bunch of people over there. So great group, good members in attendance. And we had CHLA there, Taylor Stork, Scott Olson, giving us the breakdown of what's going on in D.C. And it's a mess, and we'll talk about it here in a second, since Liberation Day is coming up. They also had a gentleman named Dan Smith who was there, who's from the CAIA, which I think is like a credit advisory organization. So basically, they're right in the middle of all the stuff going on with their credit reports, cost, changes, innovation, all that. So very good day of a meeting, a full day on Friday in a pretty cool spot. Okay, so I also heard Liberation Day, which is April 2nd, 2 days, when the Trump administration tariffs will be announced. I also heard it referred to as Stagflation Day, which is interesting. We saw the PCE come out last week, the personal consumption expenditure. Headline numbers at 2.5%. So you guys know we've been at 2.4% for 40 years. And I think it's a little lower if you go back a little bit more and you count some of the really high, it's a little higher if you count some of the really high inflation in the late 70s and early 80s, which kind of throw that out. It's kind of a weird economy and time. Oil was a big problem. Oil's not a problem right now. So the core number was at 2.8% year over year, the year long. Now that excludes food and energy, but we don't exclude food and energy. And there's been some incredible gains in prices coming down for eggs. You know, the avian flu that killed all the birds, and we had to kill tens of millions of hens that produce eggs. The egg market has rebounded. So about 45%, almost 50% down on egg prices. Cocoa prices coming down, and gas at the pump is coming down. It's been a brutal winter in January, but since then, the last 2 months, been okay. So, even though it's officially spring and heating oil isn't being used at some crazy level, people might be a little cautious right now because of the uncertainty, which is a huge theme I've been pushing on here for 7 years on LinkedIn. Uncertainty brings fear and doubt into the minds of the consumer, and all the soft data like the Michigan consumer reports and sentiment reports. If you don't like the Trump administration, you think inflation is going to go through the roof and the economy is going to have stagflation. And then if you like Trump, you think we're going to grow and everything's going to be great. And so soft data is interesting. I mean, we look at hard data here, more importantly, but soft data does matter because 70% of our GDP is consumer spending. So if people are getting cautious, they're not buying cars, they're not buying gas. I mean, we could see $60 oil here in the next couple months. And if we see $60 oil down from this range we've been in, in the 70s range. If we get closer to 60, that's usually a sign of real slowing growth, and that means GDP could be low. Now, there is a first read that came out from the Atlanta Fed last week on the Q1 GDP, and it was lower. I read some great remarks. I get some information from Mizuho Securities, great team. I met them at the Inman MSR conference in Brooklyn in December. And they basically, they think we're going to have 2.4% GDP for the year. Now, the first quarter, obviously, a little tough. There's been a lot of buying from foreign companies, durable orders, goods, gold hoardings, a ton of gold. 40% gold increase of intake coming into the United States. We're buying it. And so we're reserving. It's a good store of wealth, not an economic generator, but a good store of wealth. And those numbers of buying things from abroad and pulling them in with our import numbers going through the roof for fear of uncertainty with the tariff policy on Liberation Day brings GDP numbers down. But consumer spending data will come in, and we'll see where it lands. This will definitely be a below 2% GDP quarter, in my opinion. But one quarter does not a recession make. It used to just be two quarters in a row of 2%, under 2% GDP was a recession. Now you got to wait a year, and some economics boards got to look back and go, yeah, we were in a recession. So I don't know if we're in a recession. There's a 35% chance we'll be in a recession. I think I read an article on MPA today from Goldman Sachs. They basically said that there's a 35% chance, and they think that tariffs and all the uncertainty around that are going to trigger that. And this is the highest percentage of a recession that Goldman has put out since the banking crisis in 2023, almost exactly 2 years ago to the day. So we will see if unemployment goes up to 4.5% by the end of the year, like they project. You could see the Fed perk their ears up and cut rates. And let's talk about them cutting rates. So I talk a lot about the Fed put, and the Fed put is that floor that they're going to put under the economy. Now, they aren't necessarily going to come in and save the economy just because, but if we have less dollars circulating around the world and we have a liquidity crunch for whatever reason, there's still a commercial real estate issue out there. You've got slowing demand. You now have uncertainty with the tariff policy. And so if you go to the CME projections, the CME, Chicago Mercantile Exchange, their Fed futures tool, you could see that, by June, I guess, if you will, there's, a couple cuts baked in. There's a pretty high chance by the end of the year that there's 3 cuts baked in. So I thought June would be a lock for a 25 basis point cut. I'm going to push back to July just because I've been wrong so many times. But then, I'm going to push it back even further since we didn't even cut until September of this year. So these are our next Fed meetings: May 7th, June 18th, July 30th. Now, we get a dot plot June 18th. And my guess is that they would cut when they're putting out their next summary of economic projections at the Fed, where they get a chance to show their reasoning, how it's changed from the meeting we had just a couple weeks ago, from that dot plot, which changed from the December dot plot. And so I've been wrong every time by about a meeting or two. So I thought June would be a lock. I'll just say July. And that way, if I'm wrong the wrong way, I was right. Not that it matters, but it's a parlor game. It's fun to guess. But I look at market rates like the 2-year Treasury, and just taking a quick gander here at good folks at MBS Highway. The 2-year Treasury is at 3.88. Now, that's the lowest number it's been all year. Now, short-term rates, the 2-year Treasury goes down when there's slowing growth or possibly even a fear of recession, like with Goldman's raising their fear level to only 35%, by the way. And by the way, there's always at all times a 25% chance of a recession, according to the Fed. That's what Jerome Powell said at his press conference a couple weeks ago. But the 3.88 2-year Treasury clears the way to go from our current, 425 to 450 Fed funds rate, which is an overnight borrowing rate, which there's not a lot of overnight borrowing, by the way. But market rates tend to get followed by the Fed, and the Fed reacts. And that in between 425 and 450 is 4.375. And a good barometer of market rates is the 2-year Treasury. Also 1-month Treasury, 1-year Treasury, 3-month Treasury, a bunch of them. But if the 2 years at 3.88 for fear of slowing growth or recession, that clears the way to be less restrictive for the Fed, which means car loans come down, credit card loans come down, which is great for consumers. One reason why cars, the Manheim Used Car Index has been coming down recently is because rates are high. And so we talk about tariffs on foreign autos being made or parts being assembled in a foreign country and then imported here. If those are offset by lower rates, so what, right? So, I just read over and over, almost every news article has said, I think only one place, maybe it's just MBS Highway, that mentions this, but it's a thought that I've had as well. I love sharing thoughts with those guys. If the cost per car in America goes up by $4,000, $5,000, maybe it's $10,000, but if your rates are coming down to buy that car, your payment is offset, and we all sell payment. So it'd be interesting to watch what happens with Jobs Week. Be interesting to watch what the Fed sees with slowing growth. In Liberation Day, the certainty of the tariffs we're going to be placing on the Dirty 15. Barry just talked today on his podcast at MBS Highway. He met and spoke with Treasury Secretary Scott Bessent, which is amazing. That kind of access is pretty important. I got to tell you, this Treasury Secretary is the most visible I've seen maybe ever. I mean, they are out there talking about things, trying to calm the markets. An ex-hedge fund trader that was on this side of the market looking at bonds and fixed income securities, now on the other side, working together with the mechanics of the flow of money, working together with the Fed. And so they're very, very transparent in their thoughts. One thing that was shared on Barry's podcast that he gleaned from Scott Bessent, we've seen on some of the other media clips out there, is these are not just a tool to fight the fentanyl drug trade. So there's a legal question about these tariffs being placed on other countries that is there authority by the president to even do so if there isn't an immediate or imminent threat, an emergency like the fentanyl trade, which, by the way, is going very well on the Mexican border. Flow of everything from that border is down. And so that's good. Maybe, our kids won't be dying over fentanyl. So this thing will not be over on Liberation Day in just 2 days. So there will be counter moves by other countries. There will be counter moves by the Trump administration on those counter moves. And so we don't have the certainty we think we're going to have. Stock market sold off today, but then rebounded midday. And we'll watch the stock market. So I am not a financial advisor. I'm not responsible for your losses, only your profits. I've been nibbling on some NVIDIA and some Tesla, made some gains on some Tesla, bought some NVIDIA today. I mean, 105, what a great price for a fantastic company with at least a 1-year backlog, if not 2, in 70 to 80% gross margin on their profits. So, buy a little bit here, goes down some more, buy a little bit more, and then you think, it's a great company, go for it. So just some thoughts out there. Do it in a 401k that's protected. So if you take a profit, you don't have to pay any cap gains tax or anything like that. Okay, so what are some other things going on? I got 2 minutes here before this video cuts me off. Rocket bought Mr. Cooper, announced today, coming off the heels of them buying Redfin. They're going full stack. And I think it's a great acquisition, both great companies, fantastic leadership, lots going on there. It's impressive to see them putting their stock to work. Rocket is a publicly traded company. I think when they went public initially, it was 19% float. So when you say it's like a public company, they're not fully public, right? United Wholesale, I think, was 9%, maybe 7% public. So when people say things about, well, they're a public company, they have da-da-da-da, they're not fully public. I mean, they can make moves. And so this was an all-stock transaction. And what a time to do it when, the industry's been depressed and, stock prices are generally low, where we all, I think, collectively think that our industry is going to continue to move forward. And so I'll be curious to see what comes out of that. Q1 earnings season kicks off in April. So nothing resets the stock market more than earnings. And analysts have not been cutting and not been putting a lot of sell ratings out there and guiding down their earnings projections. So if earnings come in and companies make money, even in light of all the stuff going on with tariffs and everything that we've gone through in the first quarter, you might see a rebound there. So banks kick off next week, and they'll tell us what they're thinking. And they've got some great insights and consumer data. So we'll see how it all plays out, and I'll get back to you in just a couple days with a bunch of more stuff that I can get to today, plus everything that happens between now and then. Have a good one. Cheers.
Hey, it's KP coming to you live from crypto.com. Yep, I'm in all purple. It's my 1B team. I feel liberated. Today was Liberation Day. And Luka was unceremoniously traded from my Dallas Mavericks to the Lakers. And the good folks at Picasso, which is an incredible second home co-ownership, invited me to go see a game with them. So I'm going to watch Luka, LeBron, and Steph. They already started. I'm late as usual. But I had an offsite with Tyler Bond from Deep Haven talking about their DSCR product. So all good. Okay, Liberation Day. Why is nobody talking about rates being down? Rates are down. Locks are insane. Like, this is what we've been waiting for. Like, I do feel liberated. The 10-year Treasury, which has been focused on, maybe not in the right manner, by this administration with a tariff bomb that freaked everybody the heck out. Rates are down, the lowest they've been in 5 months. Everyone is fired up. This is what we do. I don't care about hating on what is our media doing in our business. I don't care about clickbait headlines. Dude, the headline I want to see is rates are down. We are busy. We're back. We're liberated. Anyway, I do get excited. That's what we do. We put people in houses. I just got off a call with a friend of mine who's looking for a house. He's renting, made an offer with his landlord, and he might be looking at another house in the neighborhood. So trying to keep him in our neighborhood. He's got a great little daughter who's friends with my kindergartner. So grinding, getting after it, tons of calls, super busy. Life is good, no complaints. Okay, let's talk a little bit about the job landscapes. This is Jobs Week, and then I'll get into my take, my independent thought take on tariffs. I don't watch mainstream media, so I just look at data and read things. I do watch CNBC because there's some analysis that goes on there. Man, those people are freaking out too. Okay, jobs, labor softening. Okay, so the open jobs is like 7.5 million. That's way down from 11 million. People who switch jobs are not getting paid as much as people who, well, let me say it a different way. The amount of increase for a job switcher has come down more than people who are loyal to their company and stay. So it's still a difference, like 6.2% versus 4.2%, but it's coming down for job switchers. And hiring has slowed, and the Challenger Jobs Cut came out today, and there are a lot of job cuts. It's like up 60% month over month, so a lot of jobs cuts. That's the bad side of a slowing economy, people being fearful of tariffs and how they're going to impact their business. But remember, when the economy's slow, rates come down. So very good for our industry. So everyone's very busy in our business. Looking for a good jumbo underwriter, by the way. I don't really talk about our company too much, but anyway, we're record lock volume last month, month over month over month. This whole week has been great, and every lender is experiencing that. That's what happens when you get liberated and the 10-year Treasury is focused on and the rates go down. Tariff talk. Tariffs have absolutely wiped out the stock market, but it's still a correction. It's not a bear market. So we'll wait to see what goes on there. By the way, I'm in LA. It's really pretty. Here we go. Job report tomorrow is a big deal. If it comes in soft, you might see even more of a stock market sell-off. I am not a financial advisor. I'm not responsible for your losses or your profits. If you've been following my comments on my posts, you could see when I've been playing calls, when I've been playing puts, and I've been nibbling on some good businesses. There's some great businesses on sale. If you have any money or any margin left over in a trader account, now's a great time. So to nibble on some businesses. I mean, is software going to be impacted by tariffs? So let's talk about tariffs. So I took a snapshot of the chart, and the way I read the chart, and it's everyone's getting all mucked up on the math. So we have a trade negotiation. We don't have a trade war. So this is a negotiation. And, you always hear like he who talks first loses. Well, President Trump talked first, and he put a very high number, but he also holds the cards. the American consumer is the strongest in the world. We have shipped all of our manufacturing jobs overseas for years, but we still buy stuff. If goods get too expensive, we'll just do what we did after COVID, and we shift it over to services. This consumer is smart and resilient, and savings rates actually went up. Wages are still going up. So the consumer's in a good spot. And we're going to get that confirmed likely next week when the banks report their Q1 earnings. So Q1 earnings season has kicked off on Wall Street, and the banks typically lead off with all the major data. They always start. And, NVIDIA is usually one of the last companies to report. Now, what I thought was interesting is there's a lot of exceptions from this tariff news that came out yesterday on Liberation Day. Semiconductors, pharmaceuticals, copper, energy. If you notice, Mexico and Canada were not on the charts. 50 other countries were. I thought we were getting a dirty 15. Maybe it's 15% of all nations. I don't know. But it wasn't straight tariff for tariff. The way they formulated that number up there is they said, hey, all in tariffs and non-tariff policies, you've been fleecing America to this percentage. And they wrote the percentage next to country, and then our percentage of the tariff was half. And half said to me, hey, you know what? We'll meet you halfway. So we'll meet you. That's what I saw. That's how I read it. And they don't want to meet them halfway because some of those numbers are incredible, like China and Vietnam and some of the other ones really going to have some impact. Speaking of China, I read an article in the OC Register that Shine and Temu were given exemptions. So all the cheap crap you buy on those websites seem to make it through. And, there's a lot of stuff. So we're trying to get in more investments. We've had literally like almost $2 trillion of investments committed by some companies before yesterday. There'll be some more, and now it'll be countries. So this is how you get people to the negotiation table. You say, you want our consumer, which is the biggest consumer in the world by far, second place isn't even close, then come talk, or else here's your tariff. And that's where it's going to go. After will be the interesting part. Germany and France seem to be pretty stuck in, which is weird because Germany's in a recession. They don't have the cards. So we'll see if they yield to us. There's a baseline 10% tariff put on all the countries that have a trade imbalance. So this isn't tariff for tariff. It goes by the trade deficit. So if we have a trade deficit with the UK, then we put 10% of them, even though they're a great partner. Australia, great partner. I mean, these are countries that send their soldiers to go to war with us and we're going to fight terrorism. 10%. In Australia, no beef, no American beef. So we buy all their Australian Wagyu beef. I don't, because I don't pay up for Wagyu beef. I just get a cheap little petite filet if I'm getting wine and dine, on the road. But they don't, no beef from America. No corn is allowed to go to India. Energy has some exceptions there with Canada and Mexico. So there's exceptions everywhere, but there's going to be a lot of talk. So with that talk that happens later, with this starting point, which said to me, we'll meet you halfway to start, and let's talk. I don't know where it's going to land. I don't know if ultimately in some of those nations, those 50 nations named, plus Canada and Mexico, not named on the chart, 52 nations, 52, right? Will there be a war, a longer lasting thing? But we hold the cards. We have the consumer. I know it takes time for plants to get done. I know it takes time to move manufacturing. I know it takes time to spin up an old plant. I get all that. And so the thought and the theory seems good. We'll see where we actually land and how it impacts all of us. If we have Q1 and Q2 negative GDP and we do go into recession, it's a reset. But it's really, really good for our business because rates will be low, like really good. And so you have to find the silver lining in anything. Did you buy puts on the SPX? I mean, 500% gains were done in a day for people that traded knowing that the stock market would tank. Are you looking around in your 401k with maybe some little cash in there and you want to buy some very incredible businesses out there? Apple committed $500 billion to this administration. And will there be a carve out? Do we want 54%, increase on iPhones? I mean, I know you guys probably don't. I'm on an Android, but we put some heat on Korea, which is where Samsung's based. Ultimately, where the stuff lands matters, and the prices we pay here matters. But people are just going to keep buying expensive stuff just because there's a tariff, they'll go buy other stuff that's not as expensive. So, again, this American consumer is extremely resilient and smart, and they have money, and they're doing refinances like crazy, and they're out hunting for houses, and it's spring purchase season. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenchio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.